Hello traders, welcome to the video. In this video, I'll be showing you a very powerful price action analysis and also how you can use simple trend line and support and resistance zones to catch trades in the volatility index market. So pay attention to everything I say because this video will be a very full informed video that if you go back on your chart and you take your time with your chart, you will definitely see something in your chart. And if you practice for a while, you will be able to catch live trades using this strategy. So before I continue, I want to quickly remind you of the book I told you that my team is going to create very soon, the SMC stroke ICT full breakdown. And also I will be including this price action strategy, how to use trend line like a pro, and also how to use support and resistance level like a pro. This book will be jammed with full information that will change your trading journey, and also you will see live executions so that you will not think that we are just showing you what's on chart. I will also show you that we take some of these trades. So back to the charts, what do you see over here? We are on the daily time frame and this is volatility 10 index. I have made a video like this video before, but some people said I should do more breakdown on this video. So if you look carefully on my chart, first thing you want to look for is a trend line. Where is market coming from? Where is market going? See over here, we have a trend line at this point. If you zoom in a bit, you will see another trend line at this point. This trend line is already broken over here, so we are expecting sell condition. So if you look carefully, you can see that there is a small support over here that turns resistance. That's all I can see in the daily time frame if we want to look for where market is going in this direction. Then we drop to our 4-hour time frame. So on the 4-hour time frame, you can see that the current market condition is choppy for some days now. We've been in a ranging market. So I can see a support level at this point that have been rejected many times. So I mark that out. And if you look, we cannot actually see anything anymore at this level. So let's drop to our 1-hour time frame. On the 1-hour time frame, let's see how this sell come into play, this buy comes into play, and this sell comes into play. So what do you see? You can see this is the daily zone that we've marked. Market broke, retest this support level, goes to the upside, did not reach the resistance level, comes to test the trend line again, choppy, then breaks to enter into a resistance level from the higher time frame. Now we know that market is likely to go in a downtrend. We can see it's touching the resistance level from the higher time frame. It's also touching the trend line from the higher time frame. So here we can take a sell, and once you see this level broken, we can take it up to this level. So this trade will be a risky trade because market can retest this level and still continues to go to an uptrend. But how can we catch this? When you see market touches this trend line, this resistance level, that is two confluences that market is going in a downtrend, and we can only see that it's only one that is holding it. So we can draw out a resistance level at this point. So over here we have a resistance level where we expect market to break, close below, retest before it sells to the downside. And you can see breaks below, you can see the close, retest. Once you see this candle creating a down bar, then you can enter a sell, or you can wait for when this trend line is broken, enter your sell and target the next support level in the higher time frame. You can see how market comes to enter into this level. So if you enter here, your stop loss will be above here, and if you enter here, your stop loss will be above here, because you don't expect market to break this trend line and still comes into this level. So how do you get this buy to the upside? Let's go to the 15 minutes time frame. So when training this strategy, you have to make sure that you are moving from one time frame to another so that you can get a more perfect entry. So you can see at this point we have a trend line. So over here we have the trend line broken. What else do you see? It is coming from a higher time frame, which is the 4-hour support level. So these are two confluences that is confirming to you the market is likely to go in an uptrend. So once you have that, then you will mark out your recent support and resistance level. Market uses it as a support here, breaks as a resistance, testing this trend line. You can also have a sell into this level at this point. That is also a trade, but we want to trade the safer part. So you want to see this trend line broken or this support level broken. But here we have the trend line broken, comes to retest the support and resistance level that we have marked already. We can enter our buy here, but our stop loss will be below here. So we can see our market is moving slowly, comes to touch the support level again. This can be another entry, but if you are afraid, you can only take this entry, stop loss below here. Then we see market rallies to the upside, comes, then enters into the resistance level in the higher time frame. So we are trading from support to resistance, resistance to support. But we are using the nearest support and resistance level as our target. So you can see at this point, this can also be a target. It is already forming a resistance zone at this point. This can be our first target, TP1, at this point, before market comes to enter into the main target. How do you have this sell to the downside? That will be the third example on this V10. So you can see at this point, what do you see? We have a trend line. This is a 1 hour or 15 minutes trend line coming from a higher time frame resistance level, a lower time frame trend line broken at this point, reject from this resistance level. At the same time, the higher time frame trend line that we mark from our daily, you can see it's broken also at this point. So once you have these three confluences, then you will mark out your nearest support and resistance level to that zone. You can mark this, or you can mark the closest one to that level. So we have first resistance level, second resistance level. So we want to see market touches this point and fall to the downside into the nearest support level. You can target this level, a very good support level. So reject, enter into this point. So you can have entry here, target this level, entry here, target this level. You see that immediately target, market comes reverse to the upside, reject the daily resistance level again. So you are likely to miss out at this entry because you don't have a trend line that you can use as a breakout and retest. But if you have this resistance level to the left, this one is broken, reject this level and also reject the daily resistance level. Once market is coming down, you know that market is likely to continue to go down. So once you have these two broken, you can enter a sell. Your stop loss will be above this high to target this level or this intermediate level or this overall point. So once you target that, then you will close your trade. So currently, what am I looking for? I am looking for market to generate a trend line that I can use to buy into this level, or I can also wait for market to break this level to sell to the downside and target this level around this point, support level. Because if you look over here, there is no intermediate level around this point. So once this market broke this area, we target this level. So this is basically how you can use this simple resistance and support level with trend line to catch trades in the volatility index market. This strategy works also perfectly for the forex market. It works in the jump index, it works in the step index, but you need to be flexible and to be able to trust the process so that once you see your market moving in your direction, you enter a trade and then you target the right target. So always target the nearest support and resistance level. It's not that you should enter trade there and be targeting this area in the daily time frame. This is unrealistic. You need to enter, target the nearest support level. That is where you can easily get easy money out of this. So that is all I want to show you for this video. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bells so that you can get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.